This is the Definitely Uncertain podcast, brought to you by Goldrock. Each week, we look at how high net worth families can improve their lives, decisions, and investments in a deeply uncertain world. We always aim to provide practical information, even if we can't offer specific investment advice.
Hi, welcome to the Definitely Uncertain podcast by Goldrock. My name is David Ram, and I'm a partner at Goldrock, the more than 20-year-old multifamily office servicing high net worth investors in Israel and around the world. With me today is Eran Pasternak, founder and chairman of Pasternak Shoham Investment House, focused on investing in the public markets in Israel. Welcome, Eran.
Hello, David. Good to be here.
Good to see you. To kickstart, Eran, maybe you could just give us a bit about your background, your journey, and a bit about the firm Pasternak Shoham as well.
Okay, so first of all, thank you for inviting me to your podcast. I think it's very important, to show and to share audience, investors, what is happening. Not that we know everything, especially in nowadays, in these dramatic days all over the world, and especially in Israel. So I am the chairman of Pasternak Shoham. We are an asset management firm that is 15 years in the Israeli market. We manage 8 billion shekels under management in two main services. First of all, portfolio management for high net worth individuals. And we also have 15 mutual funds which are traded in Tel Aviv Stock Exchange in all kinds of policies. Our team is 22 asset managers, analysts, that our main focus is first of all on the Israeli market, but we also have exposure to foreign markets, so we do both. Again, glad to be here.
Very fantastic. Amazing. Thanks so much. The market in Israel that you've experienced the past couple of years has been quite astounding. We've had a war after the tragedy of October 7th, and the market has just been roaring after the initial drawdown post October 7th. I think it's the best performing stock market maybe in the world, or definitely one of them, for the past couple of years. Walk us through why that is, what's going on, what's happening.
So we didn't finish 2025. Everything can happen, but still we can mark this year, I think, one of the best years in the local market. Nobody believed, also the optimistics, that we will see such a strong numbers. That, David, it is not only in the stock market, it's also the shekel currency, which is one of the strongest currencies in the world nowadays. And this is a phenomenal numbers. And I think that the big change in the last year in the war, especially in the last few months, has changed the perception of Israel in the eyes of the world. It was a very, very challenging time. Nobody knew where Israel is going to be after the 7th of October. And then few things happened that changed the course of the market, the economy and the market. And I think we've just seen a very interesting economic review of the OECD, which tries to explain what is happening here in Israel that pushes the economy so good forward. And then we see the good numbers in the Israeli stock market. You've just shared with me that yesterday in Globes, we saw that lots of foreign investors are heading to Israel. I think this is a record high of foreign investment in the local market in Tel Aviv Stock Exchange. We see a jump in the volume, the daily volume, which is today, I think, double from last year of 3 billion shekels every day. And this is, I think, very good indicator for a strong belief of investors in Israel. And it's very hard for us to understand it because me and you, we open the newspaper every day and we see all the tragic, all the problems, all the horrors. And the numbers are telling us an absolutely different story. Maybe the investors are wrong and something will happen. But we see a very optimistic, I call it, position and trend of the investors regarding the Israeli market.
So you're saying it's starting with the macro data, and secondarily, which I want to get to in a bit, are the foreign flows into the market. So what specifically on the from the macro data are you seeing that delivers such a positive message? Because obviously there's a local story, and then there's also a relative value story, meaning Israel as a market relative to other international markets, which obviously when it comes to fund flows and everything else, people are looking at Israel differently due to those macro indicators. So what exactly are the indicators that you're looking at which tell a good story?
So David, this is a very good question. Me and you can talk and try to explain what is happening here, and also the local newspapers. But I think that when the OECD, which I would like to talk about, this is the biggest economic organization, which is under it 38 the biggest developed economies, also Israel. When the OECD shows us such a positive review on the Israeli market, I think and also challenges, it is very important for us to try and understand how the world sees us and what is the expectation from the Israeli economy, and they share the report, or let's say the title of the report. First of all, this is 180 pages in English. We will focus on the Israel page. But the headline is the global economy proves resilient but remains fragile, meaning that this year there is a slowdown in the world growth from 3.2% to 2.9%. And the OECD expect the world to, let's say, grow back to 3.1% next year. Okay, this is the title. But when we jump and see what is the forecast for Israel, in my point of view, this is an amazing forecast. We can see here that for 2025, the OECD expects Israel to grow in 3.3%. You can see it here, David, which is almost the highest pace in the OECD. 2025, this is still the year of the war. And for next year, we're talking about a super higher pace of 4.9% growth in GDP.
Wow. So by far the fastest growing in the OECD expected for 2026.
Yes, but the question is, David, what stands behind it? What is the drivers that the OECD sees that will lead Israel economy to be the highest economy with the highest growth in GDP? And he points out three, I call it main things that happens now in Israel. And first of all, the OECD says that the ceasefire and the release of the hostages bring a very strong sentiment to the local market, which means that we will see an expanding consumption of the Israelis, which will push the performance, the GDP higher, and bigger investments in the local market, because soldiers are coming back. We'll see more investments in the real estate and in the industry. Second, he talks about the foreign trade of Israel, and the OECD expect, and this is very interesting, to see the boycott that we, let's say, suffered from or were feared from will fade out. And this will allow
I hope so.
We all hope so, but I think that today you don't see Israel in the topic of the news worldwide, so we are less relevant. So this is very interesting to see the drivers that will push the economic forward. And also one last thing he says regarding the trade war, it had a minimum effect on Israel, meaning that Israel
which trade war? You're talking about the international trade war led by Trump, or
led by Trump? Exactly, David. We forgot it, but Israel is paying the lowest tariff of 10.2% of export of goods, which is the lowest one. And on services, it's very interesting. We pay 0% because this is high tech. So the effective tariff on Israel is minimum. So again, the OECD is very positive regarding the foreign trade of Israel. And he states that two strong industries in the world today is defense and cyber, David.
Yeah.
And Israel is leading in both sectors. This is why he brings, or he shows us this high forecast for our GDP. And it's very interesting to see it.
So getting a bit more granular for a second, I know that in the Western world, typically about 60-70% of GDP growth is often consumer spending. You mentioned a moment ago one of the three that you pointed out was the consumer in Israel is expected to increase and grow. I mean, one of the complaints that I had during the war, besides for the obvious difficulties of war in general, was that it was difficult to get a reservation at a restaurant in Tel Aviv, which is, just an expression of the resilience, but also the consumer spending habits and activity going on in Israel. What is the broadly speaking, the percentage of the GDP that relates to consumer spending? Is that similar that you see in the US, which is about 70%? Was it lower? How does that look?
A little bit lower. In the States, like you mentioned, it's 70%. It's a very, very huge part of the American economy. In Israel, it's more than 50%, 55%, which is big and very, very dramatic as well, meaning that if the Israelis are smiling, the economic will look good. And these are the expectations. We see now all the numbers of credit card deals and payments, which is rising very, very sharply.
Right.
And I think another important slide that I want to share with you regarding the risk premium of Israel, which the OECD talks about in the last report. By the way, I warmly recommend you to read the part of Israel. It will give you a very, very good and positive feeling about, because we always read just, a negative and apocalyptic news. So this is like a refreshing, let's say, review. We can see here the CDS of Israel for 5 years bond. I want to explain the viewers, the participants, what's the meaning of it. We are talking about the insurance, the cost of insurance for the Israeli economy. Like David, me and you, we make an insurance for our car. You can make an insurance to insure yourself regarding the bonds of Israel, that if something bad will happen here, their insurance company will cover you when you invest in the bonds of Israel. And we can see that in September 23, before the war, the price of the CDS, which stands for credit default swaps. Credit is the debt, default is if a country is going to bankruptcy, and swap, the insurance company takes the risk. The price was like the bonds of the US treasuries, the same, 50 basis points. This is 0.5%.
Wow, nothing basically.
Amazing. And when the war bursted, we saw a jump in the insurance price in the CDS to a very, very high and let's say frightening numbers of 150 basis points. It stayed there until September 24, and then we all remember, we call it the Pagers operation, when Israel eliminated thousands of Hezbollah leaders, and then Syria collapsed. After the war with Iran, we saw another decrease in the, let's call it, risk premium, ceasefire, and today we returned almost to the same level we were before the war, meaning, David, that the risk in the eyes of the world of the Israeli economy returns to almost the same level before the war. People feel much more confident to put their money here in the local market. And we've just talked, about another financial indicator about the Israeli shekel, and the OECD also speaks about it, about the appreciation, the strengthening of the Israeli shekel, and we can see in this slide that today we are in record high of the Israeli shekel.
Record strengthening.
Record
3.2 or something like that. 3.2 to the dollar now. Is that where we are?
Yeah, but we're not talking about the dollar. We all know that the dollar was depreciated all over the world.
Right.
But here we talk about the shekel compared to a basket of currencies. The Bank of Israel is measuring all our counterparties of Israel, which is 27% in dollar, 23% in euro, 15% yuan, etc., a pound, etc. All the currencies together, their average value depreciated to a record low for the current foreign currency, or record high for the Israeli shekel ever, David.
Yeah.
So this is, I think, fascinating. And, one should understand that when you see such a trend, it tells you something.
Yeah, I would say two things. First of all, the bad news on that is
exporters.
There's exporters and there's exporting people as well. I mean, there are people who are Israelis who I love dearly who are looking at this shekel strengthening, and they're saying, "Oh my gosh, I could live in Portugal for a lot less
it's tempting,
difficulty."
you say, yeah.
So there's a little bit of an export of people as well, not only an export problem of goods, but that's definitely an issue that I've noticed, and I can only imagine that export being an important part, not only people but tech and other goods, defense, as you mentioned, are major drivers of positive economic growth, and that challenges the companies that are manufacturing locally and then selling outside of Israel. How is that going to affect them long term? How is the Bank of Israel going to deal with that?
Okay, so before the Bank of Israel, which is a very important issue to discuss, which will have effect on capital markets, I think that we should all understand that 1 or 2 years ago, the forecast for Israel and the situation was so frightening, so fragile, so apocalyptic, that if you put aside everything and you look, I call it economic-wise, not only that nothing happened in the economy and in the export of Israel, we saw an improvement in the export of Israel, improvement in export of defense, which was doubled in the last 5 years.
Yeah.
The export of high-tech industry, there were lots of, frightening thoughts that the companies will close and move to the States and nobody will invest here and what will happen. Nothing happened, and we can see just the opposite, that if we measure the activity in the high-tech industry in Israel, and this is also a point that the OECD states, not only that it depreciated, now we see the high-tech capital raising in billions of dollars each and every quarter, there was a rise in capital raising. There was a rise in the export of the high-tech industry. We also read lately that Google, just now this is the closing of the deal, is doing one of its biggest purchase of Wiz, the biggest purchase of cyber company in the world. It was during the war.
Yes.
And we know that NVIDIA decided to open one of its biggest
R&D centers.
Exactly, R&D centers here in the north of Israel. And this is very interesting to see that, titles aside and real economy aside, this is a different story that we see.
That's true. I'd also point out that what we've noticed, and it wasn't that much different during the past 2-year war, that the tech market in particular, the capital flows, the exits, are much more affected by macroeconomic trends in venture capital than they are by local geopolitical trends. So if you look at the actual tech market investment activity in Silicon Valley, there's also been a big dip since 2021.
Exactly.
It's been a deeper dip in Israel. It has been
a bit,
but there's been a recovery as well, a little bit in Silicon Valley, and that trend line is similar to what you see in Israel. Interestingly, I'll just point out, because we all have friends in the industry of venture capital in Israel, because that's the big market here.
By the way, David, you asked about Bank of Israel. Bank of Israel, the slide we just saw, he presented it to the government of Israel, and he said three important things that all of us should remember. The high-tech industry is responsible for 16% of our GDP, 57% of the Israeli export. I repeat, 57% of our export is the high-tech industry.
Wow.
Last but not least, more than third of income taxes of Israel come from the high-tech industry, meaning that without the high-tech industry, we all know we have no future. And then he states again, we must make sure that the young generation will have a sufficient education and high skills. We are not excelling in that, but this is the challenges for the future. And speaking of Bank of Israel, it's very important. This podcast is exactly when we saw the inflation continuing to go down by 0.1% this week from 2.5 to 2.4. This is a low inflation, which will hopefully allow Bank of Israel, the conservative, let's say, central bank compared to other central banks, reduce our interest rate. By the way, the OECD expect the inflation to stay in 2.4% and continue going down to 2% in 2027. And he invite Bank of Israel, which is very, let's say, not acceptable. He calls him to reduce the interest rate, the OECD.
Yes.
It's unusual.
The problem is that I have so much to say, but the problem is that when you reduce the rate of interest, putting aside the chart that you have up on the board showing inflation versus the interest rate, it's also very relevant for the strength of the shekel, in particular versus the US dollar, which is the primary trading currency of the world, that when you have a lower rate of interest, people will own less shekels and own more US dollars, typically speaking. So isn't it important to make sure that we have a higher rate of interest above and beyond the US dollar rate of interest? Because otherwise you're going to further have this strengthening of the shekel, which is it's all good, I get it, but it creates a real problem for exporters, which you just pointed out. 57% is tech. So how is that going to affect if he decides to lower the rates?
So luckily, the high-tech industry make, let's say, call it so much money, and their P&L spread is very, very high. They can afford themselves to live with a strong shekel, but the low tech, David, is in a big problem, because when the margins are so low,
right,
the shekel can move you from earning to losing. The high tech industry, I think, will be okay. But even if Bank of Israel will reduce, and he will reduce the interest rate, I think, in higher paces next year, it won't depreciate the Israeli shekel, because the inflow of foreign currency from the gas, from the defense export,
from the natural gas,
for natural gas,
yep,
for natural gas, we have an average of $20 billion each and every year falling from the sky, and you can do nothing about it. And then you can ask the question, maybe Bank of Israel will continue to buy US dollars in order to support the poor US dollar that always drops compared to the shekel.
Right.
This is very hard nowadays, because we must remember that on the other side of the globe, we have Trump, which won't like this intervention in foreign trade. So this is very, very gentle period of time. You have to play the right game. But just to summarize it, what should we expect from the interest rate in Israel? So we have to remember a main guideline of central banks. They aim for a real interest rate which will be zero or a little bit positive, meaning that if we expect an inflation in Israel of 2.5%, the interest rate should be around it, maybe 3%. It means that we have 5 reductions, at least 0.25% each, and this is a very good news for the bond market. So now we'll move to, I believe we'll move to investments. I think the bond market in Israel is very interesting. I think this is the sweet spot of investors in bonds in Israel. First of all, you have the Israeli shekel, but let's put it aside. You get today an average return, if you take the all bonds index in Israel, general bond index in Israel, the yield, expected yield is around 5%, which is very good to open a year in 5% and above.
Yeah.
And then when we will see the reduction of interest rate, you have a good opportunity for capital gains. This is 5% plus, unless something will happen in the world, and we have, a very many scenarios that can change the picture. But our main assumption is that bonds today gives you a very good return, which you won't see next year. When we'll do this podcast next year, we talk about much lower numbers.
Right. But let's talk about the more specific elements around the Tel Aviv Stock Exchange, the stock market in particular. You just to set the stage for a second, you talked about the CDS, 5-year CDS dropping to close to where we started prior to the war, the risk premium, as you called it.
Yeah.
There's another version of risk premium, which is the actual multiple on profits, or however you would like to evaluate the stock market versus other stock markets. So what, just to set the stage, I always remembered that there was a discount, if you want to call it that, in the stock market in Israel. And the past 2+ years, the market is up, I don't know the exact number, but it's in the neighborhood of 70, 80% in value. That's not growth. That's going to be heavily skewed to multiple expansion, to the actual increase in value on a unit of earnings. That is the majority of, it has to be the majority of the returns over the past few years in the stock market. So as you said before about the CDS is getting close to where it was prior to the war, but not in the stock market. In the stock market, we're way ahead, meaning we're way improved.
Way ahead.
So, and the last thing I'll just, because I know you're gonna talk about that, I want to make sure that you also touch on the sector orientation of the market in particular, because we talked a lot about tech. A lot about tech relates to the export market, but how is that reflected in the stock market, if at all? I'll let you take it.
Yeah. Okay. So I think what happened here in Israel in the stock market, like I said at the beginning, nobody believed that we will see such a strong numbers.
Yeah.
And I think it means that the investors, let's just rephrase the meaning of such a strong capital market. It means that investors are expecting a very, very good and optimistic future for the country of Israel. Otherwise, they won't put their money here. It's not foreign investors and not local investors. I have to remind you that all the institutional in Israel shifted foreign investment this year, 2025, back to Israel. They moved lots of investment out. It was before the war and after the war, and then they moved it back, plus foreign investors. And then we can see, first of all, the numbers, and we'll talk about valuation.
Yeah.
What we can see in this slide, I think it's an amazing, trend. We can see 3 markets: the Tel Aviv Stock Exchange, the S&P, and the Stock 600. So the Tel Aviv market, let's say, outperformed from the beginning of the year. We all know it, almost 50% compared to the S&P. And S&P, if you evaluate it by shekels, you have to reduce 13%. It's almost 5%. From the beginning of the year, meaning the 6th of October, before the war bursted, if you measure the performance, we still lead by far in 90% compared to 65% S&P and 40 Europe. 5 years, David, you see the same numbers.
Yeah.
But we have to understand that the big gap opened in the last year.
Yes.
Okay.
Definitely.
So
and that's all what you're showing on the chart here. It's local currency, meaning it's shekels, dollars, and euros.
Exactly.
Okay.
Exactly. Shekel, dollar, and euros, and we can see a very, very unique performance of the local market.
Yeah.
And again, I think it reflects expectation from this country for the near future. And when we try to understand it, I think that one of the assumptions we have is that investors are hoping to see a new Middle East, David. New Middle East, meaning that we might have mutual understanding in Abraham agreements. Maybe with Syria, Lebanon, Saudi Arabia, this will be a very big game changer to this holy land, meaning that you'll have new trade deals with other companies. The risk premium will continue to go down. Lots of investment will come to Israel because we will be maybe one day legitimate country to do business with. And this alone can add 1 and 1.5, between 1 to 1.5% to our GDP. That's a Bank of Israel said in the past. And I think the rush to this market, to the Tel Aviv Stock Exchange, one of the explanations is expecting a new Middle East. We do not know. We hope so, for quiet days and let's say, stable relationship with our neighbors. First time in our history from when this country was established. Regarding the prices, if we look at the PE ratio, the S&P is more than 25, which is much above the average of the last 10, 20 years.
Yes.
Again, we all understand the S&P today is a little bit lying. This is 30% high-tech industry. Never before we saw such a big portion of technology firms in the S&P. That is why the PE ratio is high.
Yeah.
But if we examine Tel Aviv, it might be a little bit surprising. Tel Aviv is a low-tech industry. We have, real estate. We have energy. We have finance. It's approximately 15, 16, the PE ratio in average. The most expensive sectors here in Israel are the finance, banks, insurance, which are in record high. We never saw such good numbers. And I think one of the reasons is that foreign investors, when they come to Israel, they are looking for liquidation. And if you want liquidation, you should buy Bank Hapoalim, Bank Leumi. It doesn't matter.
Liquidity.
Liquidity. You go for the biggest firms. That makes the mid-cap much more interesting in Israel in terms of valuation. Because when you see, let's say, separating the, let's say, Tel Aviv 35, which is in the highest liquidity.
That's the top companies, the top 35 companies in the market.
Yeah. So we see differentiation between the small cap, the mid cap, and the large cap, which we enjoy the biggest demand here. So
are tech companies looking at the Tel Aviv market now and saying, "Ooh, instead of going to Nasdaq, maybe I should do the IPO in Tel Aviv"? Is that happening? Do you think that's going to happen?
Unfortunately not, because of, I think, two main reasons. First of all, the big market is the States. It's much easier to raise lots or much bigger amounts of money.
Right. Makes sense.
And second, the regulation is much more friendly in the States compared to Israel. Unfortunately, we do not see it. We hope it will happen. It means, David, by the way, that if you invest to Israel, one must remember you invest in a low-tech industry. Most of the firms, let's take out, you have NICE, you have in the semiconductor industry, you have few small companies, but let's say 95% of Tel Aviv is three sectors. You have the finance, you have the real estate, and you have the energy. Which is good. And I think that if Israel will reach the expectation of the OECD and will see a very high growth in the GDP and maybe a new era in the Middle East, you can see a good performance of the stock market because of the inflow of investments, but it is in record high, which means it's much more sensitive. And if we look at the S&P 500, we have the same, let's say, challenges, because also the S&P is record high today, and we saw what's happening when the market is so expensive. Last week, when Oracle shared its reports, it was a very good report. It earned only $6 billion and not more. It was very good, but not excellent.
Right.
The market punished her. The stock fell in 15%, and they pulled Nvidia and pulled other stocks, meaning people are very, very, let's say, afraid if there is a stock, let's say a high-tech bubble like we had 25 years ago, it's not the same. It's not the same thing today. The companies are making lots of money,
Right.
but the market is much more sensitive.
Interesting. I thought that Oracle dropped just because the CEO, who was Israeli, retired, and they pulled all the money out after that happened. No, I'm just joking.
Maybe.
Maybe.
Yeah.
Just in terms of the risk side, for a minute on the risk for a moment, because you're talking a lot of positive data, a lot of positive outlook, but a lot of those positivity, as you just pointed out a moment ago, relates to the foreign flows that we discussed earlier, the dramatic increase in foreign capital flows, the increase as well in the local institutional market of shifting from U.S. markets or European markets back into the Israeli market. So you have these capital flows, which have been really important for liquidity, really important for valuations as well over the past couple of years. And a lot of it sounds like what you're saying is predicated on the expectation of the risk premium staying improved and potential future trade deals or potential future peace opportunities with our more immediate neighbors, and of course the increase in defense spending and everything else across the world. There's a lot of political risk in Israel, so it sounds like there's a lot of optimism priced into the market. Are you saying that if some aspects in the political realm in Israel, which is pretty fluid, challenging, and it can move fast. It's not like the U.S. where in order for the U.S. to get things done, there's multiple layers. There's a lot of talk shows on the TV to talk about stuff in America, but it takes a lot to get stuff done in the U.S. government typically. In Israel, it's run by the prime minister, typically speaking, and there's a lot of power, much more centralized power in Israel, just structurally, the way the country works. That means that it could be much more volatile in terms of output. What do you see the risks are moving forward for 2026 in the stock market, besides for the valuations being high, but if there are elements that could emerge, the ultra-Orthodox joining society, joining the army, aspects around the judicial reform that happened prior to the war, maybe even security issues that can emerge once again. What would happen if those things happen? Is it priced in? Is it not priced in? How are you seeing those risks?
So this is a very good question, David, because we all live in this country and we all live the problems and trying to understand what will be the impact of these problems further on. First of all, regarding the political challenges that we face today, I think that although we have a political crisis, let's call it, here in Israel, and the politician and the government of Israel, unfortunately, is not taking and acting in important aspects that we would expect it to act, like ultra-Orthodox Jews joining civil life and the army and improving the infrastructures and education. Although we are in this hard, let's say, political era, the economic is working very, very good, meaning that if we'll see an improvement and a better coalition, which will work for the civilians better than this government, you can add it to the positive, let's say, expectation from the market. So still, although we have such hard problems in the politician, geopolitical side, the economic works very, very good. So I think this is priced or calculated in the market, the capital market. And we can see a very interesting slide, by the way, that the OECD states out, like you said, David, that we have a problem in Israel of low productivity. This is the main problem that the OECD points out. This is the productivity per worker, per capita of $70 average in the OECD. In Israel, it's $60 for worker, which is low, which is bad. And we call ourselves developed economic, high-tech industry. The numbers shows us a different story, and the OECD points out 3 problems. By the way, politicians, these are the problems that the government of Israel should fix, should take care of. First of all, it's education. Education is not accessible for two big sectors in Israel, Arabs and ultra-Orthodox Jews. This is third of our population which do not have the basic skills, David.
And growing.
And growing. Secondly, infrastructures. We all drive in our car every day to the office, and this is unbearable.
I think your business partner takes his bike, but most of us drive the car.
Yeah. By the way, the Ministry of Finance stated last week that the cost of the traffic jams for the Israeli economic sums in 24 billion shekels, losing in GDP because of infrastructures which are not suitable for Israel nowadays.
Wow.
And third, they talk about bureaucracy, which is means very hard to do business in Israel. So if you take these three problems, which unfortunately the government today do not, let's say, look at them or try to fix and improve them, we have a big potential which is not realized. You know, we have a saying in Hebrew, when the kids go to school to summarize the year, he has a potential but is not fulfilled. So Israel has a very big potential, but we just have to work on it in order to better improve our performance.
Right.
And still, taking all these problems into account, positive review for 2026. We won't see the same numbers of the Israel stock market next year, maybe, but we should be realistic. And we should remember that stock market do not do 20, 30, 30% each and every year, much more moderate, 8, 10%. In our point of view, David, and correct me if I'm wrong, is real expectations. And we should remember that we have the bond market, which is very, very interesting. It's a very, let's say, this is the peak of the yield that we can take today, which won't be later on.
Absolutely. There's a famous line in American politics, at least, by Bill Clinton's chief strategist, who said in the 90s, he said, "It's the economy, stupid." When it comes to why people win elections, we have an election year coming up in Israel in 2026 as well. The economy is booming, and that could be a major driver for whoever may take the cake in 2026. If I can finish off with you, Eran, on one idea, if you could think of an interesting single trade company idea that's more specific than just the broader market in Israel, to leave us with for a 2026 investment idea, that would be wonderful.
Yeah. Okay.
For a present for Hanukkah, because I forgot to mention that we're recording this during Hanukkah, so a Hanukkah present for our viewers.
Hanukkah. I hope it will be considered as a present. But I think first of all of us should be as person, and of course as investors, we should all be moderate. And moderate means to have, let's say, expectation which reflects the forthcoming, the future. So first of all, I think that Israel is much more interesting nowadays because of all the geopolitical changes, meaning that being in Israel in a higher portion of the portfolio is a more than good opportunity. We should remember that the local market is in record high prices, meaning that we have to be much more picky and look at the middle and small cap, which did not enjoy the inflow of foreign investments like Tel Aviv 35, the large cap. And remember again, by the way, if we compare the performance of the US bond market to the Israeli bond market, the US bond market overperformed the Israeli market because of the Fed, which reduced the interest rate in higher pace because of the pressure of Trump, whatever. Here it didn't happen yet, meaning that the upside is ahead of you in the local bond market. So bond is interesting, medium and small cap here in Israel interesting. We should all look after the S&P, which is much more shaky and fragile, but for the future later on, high-tech investments should be a very important part of the portfolio.
Got you. So I heard small cap and long duration bonds. Those are the two more interesting, because the longer duration, I assume, will benefit from the capital gain potential if they lower the rates.
Not. I agree with you partly. I think that you don't have compensation in long bonds here in Israel. You get 4% for the 10-year, and you get almost 4% for 5 years. So again, moderate. I prefer the 5-year, which lowers the volatility of the bonds. By the way, I can make it synthetic with lower and shorter terms of bonds, but I think the average for the average investor should be 4 to 5%.
4 to 5 years in the duration?
4 to 5 years, yeah.
Okay, 4 to 5 years in the duration, and small mid-cap stocks, which are not experienced, not yet at least, the foreign inflows, because most of the foreign inflows went to the ETF, went to the passive market more than the single stock market. Super interesting, Eran. Thank you so much for your time. Really enlightening, and it's good to get some positivity, some good news in the.
We deserve it.
We deserve it. We deserve it. And we deserve it. Absolutely. Thank you so much for your time. Happy Hanukkah to you and your family. And thanks everyone for listening.
Thank you, David, for inviting me. Happy Hanukkah. And we all hope for good, better days.
Amen. Toda.
Amen.
Bye.